She got her own house. She got her own house. She got her own house.
Hey family, welcome back to my channel. So today we're going to discuss interest rate drama and what options you have. So let's talk about it. For everybody that's been following my channel for quite some time now, you all know that I've been under contract since last year, 2021. So I honestly haven't been paying that close of attention to what's been going on with the interest rates. I was scrolling through YouTube, minding my own business this past weekend, and stumbled upon a video talking about interest rates. The video was by CNBC, and I almost fainted, y'all. So I'm going to go ahead and flash this graphic on the screen from that video where they said that interest rates are now 4.95%. I mean, I was speechless. I couldn't believe it. Just because literally last summer, the Naca interest rate, was as low as like 1.75% for priority members. So it is so shocking that in less than a year, the interest rate has tripled. So I'm not being insensitive. My heart definitely goes out to you guys that's currently in the house shopping process and trying to get your first home or another home. But for those of you that don't really understand interest rates, today we're going to break it down. So in its simplest form, when you borrow money to get a mortgage, the lender expects you to pay it back over time with interest. Okay, that's it. Plain and simple. So if you are a cash buyer, obviously I'm not talking to you right now. Congratulations. I'm so jealous of you that you can buy a home with cash. But for everybody that's like me and taking out mortgages, you're going to have to pay some sort of interest rate. Okay, that's going to vary depending on when you entered the market and even who you choose to get your loan through. It's going to vary from lender to lender, as well as your credit score, or whatever type of financial situation you may have, how big your down payment is. There are a lot of things that go into determining what your interest rate is. Now, for a 30-year fixed mortgage, you are going to be required to make 360 payments of principal and interest back to your lender. Okay, this is what banks or lenders like to call an amortization schedule. So I'll flash that on the screen just in case you've never heard the word before and you can go and look more into it. But this is basically what you're doing, okay? And obviously, the more that you make payments, the more of that money is going to go towards your principal and less towards interest. So here, let's just keep it simple. Let's say you have a $1,000 loan. Whatever your interest rate is, say your first payment is $50. So your very first month, you're going to pay $50 and your interest rate is crazy. So $25 is going to principal and $25 is going to your interest. So in month 2, you're going to only be paying interest on $975 because remember, you reduced your principal amount the very first month by $25. So the more and more payments you make, the more and more of your money is going to be applied towards your principal because your principal amount is going to be less and less. So if you are wondering how to determine how much you're going to be paying in interest on a 30-year fixed mortgage, is super easy, okay? All you need to do is take your interest rate and divide it by 12. Like, it's literally that simple. So say you have a 2% interest rate, fixed interest rate on your 30-year mortgage. Simply just divide that 2% by 12 and you're going to get 0.16666, okay? That is going to be how much interest you're going to be charged on your outstanding loan balance every single month. Remember, we just discussed your loan balance, your overall loan balance is going to continue to decrease with each payment that you make. So that very first month, you're going to pay, your monthly payment is $50 and you're going to pay 0.16666% interest on $1,000. But remember, you made the $50 payment and $25 apply to principal and $25 apply to interest. So now for month 2, you're going to pay 0.1666666% interest on $975, okay? And so the next month, because you've lowered it again, you're making another $50 payment. This time, instead of $25 going to principal and $25 going to interest, maybe $26 is going to principal and $24 is going to interest, okay? I know like no one is getting a $1,000 mortgage, but it's easier for me to just use small numbers so that I can make this easily explainable and understandable. At least in my head, I'm able to easily understand this if I'm using a smaller number, okay? But you guys get the gist. Divide your interest rate by 12. See what your overall outstanding loan balance is. Do the math each month. Just expect that each month you're going to be paying less in interest and more in principal with each and every passing payment. Keep in mind that I have not been talking about escrow, and that includes your property taxes and insurance. Your lender does not care about that. All I've been talking about so far and with that example is just your principal, aka your mortgage amount, and the interest rate that you and the bank agreed that you would pay the money back at over time, okay? That's all. I know when I first started my home ownership journey, I really didn't understand. Like, I got the gist of how interest rates affected me. I'm like, okay, I know I'm going to need to borrow money and pay it back over time with interest, but okay. But once I started running the numbers and I saw that with this interest rate, $100,000, a loan for $100,000, I could pay this much every single month. But with this interest rate, that same $100,000 loan, I would have to pay this much every single month. So I don't think it ever really registered to me that this would trickle down to how much I'm going to be paying every single month. So I just want to advise you guys to just be vigilant, okay? If you are still in the home search phase, because what you literally could afford last week, you may not be able to afford this week. They are saying that interest rates are supposed to get to something crazy like 7% over the next month or two, guys. So please, please, please be informed. Once I saw that video this past weekend, it triggered me to start doing more research and to look into what's actually going on with the interest rates and what are people getting for their money right now if you're still in the home search phase. So let's go over a few screen grabs that I was able to capture from a few different lenders about what their rates are right now, at least at the time of me recording this video. First up is Rocket Mortgage. Their rate at the time of me recording this video is 4.625% for the 30-year fixed mortgage. All of these are going to be for 30-year mortgages. If you are doing a 15-year, or I've seen 20 years and 10-year mortgages, your interest rate will be lower, but your monthly payment will be higher because you're paying back that same amount of money in less amount of time, okay? So yes, you can get a cheaper or better interest rate if you do a shorter term, if you can absorb the higher monthly payments. But okay, back to Rocket Mortgage. So you guys may notice on this graphic here that yes, the rate is 4.6, but that includes points of 2.1. So if you have already spent all of your money on a down payment and you don't have the additional $2,000 or I'm sorry, what is it? $6,000, $6,375 to buy down their rate anymore, then you're going to be stuck with an even higher interest rate. So don't be sucked in. Read the fine print when you're going and doing your research on these different interest rates. Next up, we have Rocket Mortgage's interest rate for their FHA loan. I don't know if you guys knew this or not, but FHA is not a lender. You cannot go to FHA.gov and apply for a mortgage, okay? You have to go through an approved lender, just like with Naca. But their interest rate is much better for an FHA loan, 4.125% for that. But again, in the fine print, you can see that that includes 2 points. Next up, we have Bank of America, and their rate today is 4.625% for a 30-year mortgage, and that includes 0.8 of a point, so less than 1 point. So that is still worse than the FHA, but still a little bit better than the Rocket Mortgage interest rate. However, I can't stress this enough. If you are going the traditional route, you need to be sure to speak with a loan officer first. Don't just go by what you see online. This interest rate or these interest rates that you're finding online for traditional lenders depend on a lot of factors. Most importantly, your credit score. So if you don't have at least a 700 or above credit score, you're not going to get these interest rates that are advertised online. Maybe a 680, but I think they've gotten a little bit more strict. But just know, the worse your credit score is, the higher the interest rate you're going to receive from a lender. Some of you may be wondering, what is she talking about with points? I've been saying that includes points. So Bank of America actually had this graphic already on their website where I just showed you their interest rate. So I wanted to go ahead and screenshot that and share it with you guys. I'm going to flash it on the screen now so that you can see what I mean by points. And points, by Bank of America's definition, an amount paid to the lender typically at closing in order to lower the interest rate, also known as mortgage points or discount points. 1 point equals 1% of the loan amount. Okay, so does that sound familiar to you guys? Yes, it should. If you have been following my channel, you already know what that is. Points are AKA Naca interest rate buy down. I'm not sure why Naca doesn't call it points and they call it interest rate buy down. Maybe to make it more easily for people to understand. I'm not sure. That would be a question for your counselor, I suppose, or Bruce Marks maybe. But anyway, yes, interest rate buy down is not exclusive just to Naca. And I don't know if many people in the Naca program actually knew that. I don't remember what my interest rate was when I got under contract, but you guys know that I was required to get underwritten by my builder's lender. It was just a part of the requirements in order to get under contract. And when they sent me my loan documents that had my interest rate, and it said that I could have bought down my interest rate to 1.75%. So every lender offers these point systems or buy down. But speaking of Naca, let's talk about their interest rate today. So Naca's interest rate today, Naca actually has two interest rates if you're new to my channel, but the first interest rate is 3.875%. And that is for low to moderate income people or people living in low to moderate income communities. I went through this in so much detail in my last week's upload. So I'll go ahead and link that video up top so that you guys can check it out, because I'm not going to rehash that today. But just know that you have two separate interest rates if you decide to go through the Naca program. In the very fine print, you can see for higher income people or people that are higher income and choose to still live in a higher income area, then your interest rate will actually be 4.875%. Yikes. Don't be completely discouraged just yet, because you do have the option of points or buy down. I just went over it so you guys see for yourself on these different websites that you are able to buy points if you have the additional funds left over, okay? If you're going through the Naca program, my advice to you is please consider looking at a low to moderate income neighborhood. If you are a person that is a higher income individual, if you get the interest rate of 3.8, that is still a pretty good interest rate, especially after buy down. You may be able to get that rate down to around 3%. That is still an excellent interest rate, even before the historically low interest rates of the past 18 to 24 months, around, give or take a little bit, before the interest rates just got really, really low. If you were getting a 3% interest rate on your mortgage, you were doing good, okay? So all hope is not lost. If you are a non-priority Naca member, please consider looking in a priority area. Don't automatically assume that they are in the bad parts of town. Yes, some of them are in the bad parts of town, but I was able to find one and I feel completely comfortable living there, but that's because mine is more rural. It's not been developed yet, so it's not much out there right now. I'm sure over years things are going to be continuously built up out there, but I was able to take advantage of that and find a place where I would still feel safe raising my family, and I would still feel like I could get appreciation in my home because it's in a good area. And just because it was in a low percentage tract did not mean that I was moving to the slums. Okay, so keep an open mind. Definitely, if you see an area that's less than 80% of the tract median income percentage, go drive by there and check it out for yourself before you automatically just discount it out. Saving for a home is expensive as is, but definitely run the numbers sooner rather than later so that way you know what you are up against. If you are going to need to buy down your interest rate, that is going to cost you. Depending on your lender determines how much it's going to cost you and how much you're going to be able to buy down. Each lender is different, okay? But it's generally between 1% and 1.5% or somewhere in there of the loan amount is going to be required to buy down per point. But definitely that should be something easy that you can find on their website or reach out to MLO at that particular lender and they can hopefully give you more information. But just know that you're going to need to buy down your interest rate, maybe. And if so, what can you do to maybe supplement your income in the meantime and in between time while you're saving for a down payment or saving for upgrades or saving for repairs or saving for moving expenses or saving your payment shock if you're going through Naca, all of these different things that you're having to do right now to prepare yourself for home ownership. Maybe you need to start picking up an extra side gig or taking some extra hours at work because now you're going to need to have an additional pot of money set aside to buy down your interest rate or purchase mortgage points. But that is it, guys. I hope that this video was super helpful. If I forgot anything, I apologize, but you guys know the drill. Let's jump down in the comments and talk about it. Don't forget to give this video a thumbs up and, of course, subscribe. And I will see you guys in my next video because it takes a village. Cheers.